Welcome to ShortView Trends, your morning market hit for Thursday, 7th of January. What matters today for traders? Well, what an extraordinary couple of months it's been. Since the lows in global equity markets in late October, the rotation in markets and the leadership has been dramatic, with clear switch of leadership to value and cyclicals and away from tech. Indeed, a quick look at the numbers shows that the Nasdaq 100 is up about 11% since its late October lows, whereas the likes of the DAX up 20, emerging markets up 17, Europe up about 20, the global banks up 36, and the Russell 2000, the mid caps, up over 30%. All of those indices significantly outperforming the tech sector, which has lagged and has been the laggard in the last 2 months. Now, interestingly, yesterday, with the Senate race in Georgia moving towards favouring the Democrats and it looking as if the Democrats have won both Senate seats and therefore taken control of the Senate House and generated that blue wave. Interestingly, with that, and despite the chaos we saw on Capitol Hill, that theme of rotation continued and continued quite markedly in a quite stark manner. The Nasdaq 100 was down on the session. Cyclical parts of the market were very much up. Whether you look within the S&P 500, where energy, industrials and materials once again provided sector leadership within the US equity market, or whether you look at places like the Russell 2000, which once again was up quite strong and quite aggressively. A classic cyclical index, benefits from that rotation into value and cyclicals, and was up around 4% yesterday. Now, hopefully those of you subscribed to the Daily Rag via our website picked up on our Russell 2000 trade recommendation yesterday. Indeed, every day we update all our key risk appetite models, our key view on markets on a 1 to 2 week basis, and our view and detailed view of how the market's been trading and how we expect it to trade. Every day that's updated in the Daily Rag, which is available to subscribers via the website. But of course, that leaves us the question, where now? What next? After 2 such dramatic days in certain cyclical indices and the Russell and so on. Where do we go from here? And of course, the key point there is that there's still plenty of fear priced into these markets. Look at this chart of the VIX that we're putting up in front of you now, a candlestick chart, showing you that it actually gets considerably lower back in December, as recently as December. And of course, it can go lower than that in certain market environments. So there's more fools in the VIX that are potentially out there. That, of course, prices out fear, pushes markets higher, and the VIX and the S&P have a pretty strong negative correlation on a day-by-day basis. But you can see it in other models as well. And indeed, you can see on the chart in front of you now, there's a gap open between high yield spreads and the VIX index. Normally, these two move in tandem, hand in hand. And if the spreads are correct, that suggests the VIX can fall further, thereby pushing equity markets up more from here over the next week or two. And of course, added to that, another way of thinking about this is realized less implied volatility. A gap has opened up between realized and implied equity volatility in the US market. And if that resolves itself positively, that suggests further falls in the VIX as well. So all of these models support the idea that there's further potential near-term upside and therefore the potential for further rotation in these equity markets. For full detail on how we're playing this, please see today's Daily Rag, available to subscribers via the website. So what are we watching today? Well, other than the price action, which of course is critical, and whether or not that rotation continues, how Bitcoin trades and so on, there's lots of bits and pieces of macro data out. 2 things in particular have caught our eye. The ISM non-manufacturing, i.e. the service sector, ISM index is coming out later on today in the afternoon London time. And then on top of that, we've got a flash Eurozone consumer price index data point. Added to which we've got a couple of Fed governors speaking, Harker and Bullard. So that's it from us. That's your morning market hit for Thursday, January the 11th. Thank you for listening. Please do subscribe on YouTube. Simply search under ShortView Trading or follow us on Twitter, LinkedIn and or Facebook. Thank you for listening. Stay safe. Trade well.